Insiders are sending me stuff that I would never see on the mainstream media to my email box, and it's stuff that I haven't seen actually since college, which not even bleach could remove that from my... Now, I'm not telling you, like, duh, scratch that, cue the fire. This is a third time? I didn't even say it, but we're looking at a 99% crash. And it is related to the housing market. And not just that, but also consumers. Skylar, lower the TV thing. The consumers. Skylar's not listening to me. Skylar, TV, thank you. You guys are saying it's really bad out there. And what? Do I have to do everything? Consumer confidence slips. I even have a story. What, Morgan Stanley crash in March? Oh, that's great. Another 26%. But what you say, Fox Business? I'm sure it's good news. Charles, give it to us.
Get very, very tight.
And very, very tight is a good thing, but that's not what I wanted. Okay, we'll try this again. Why are you connected?
The consumer is not strong. There, I said it.
There. All right. No matter what the media is telling you, and you guys are spending like drunken sailors, and I'm going to get to that. But what do you guys want first? The housing market, 99%? Or do you want the stock market? And as I jump over here, breaking news, Tesla. I'll get to the stock market in a second. But that's up. But I don't think it's going to stay. Okay, guys. To buy and hold, I'm never talking about that. We get in, we get out. And I made a shat ton of money over at that far left. It's left to me. I don't know what it is to you. That peak. And then I exited. And now it's went up. And everyone's like, ha, ha, ha. You said Tesla was going to go down. It did. I got out. Now it's going up, but that's going to stop. I'll show you. But now on to the housing market, kind of. You'll see. I mean, some people RV, remember? Yesterday I did an RV sales, just kaput. So he capitalized on this. He goes, oh my gosh, I'm in this industry. Wyndham Grand Resort. People are scrambling. You guys know when you sign up for a timeshare, all of that. Pick a location, any location, pick a resort. More than likely, I can find a distressed seller for $1. So when you guys go to your little resorts and are like, hey, come listen to this, and then they ask you to kick in 40 grand, don't. You can get it for $1 now. So look at this. Look at these. Went resort, Las Vegas, $1. That's it. Everyone wants out. Las Vegas, $1. Buy it now. We also have another one. Oh, little pricey. On the beach, New Mexico. Is that New Mexico or is that Mexico? And that's the Marriott. Look at that. Yeah, Marriott looks like, that's Hawaii. That's Hawaii. $45. I'll take it. So think about that for a second. You just cut him a check for 40 grand. You should have looked online. You could get it for $1 now. Everything is crumbling. No, Bravo. Look. The stock market. It went up today. And I say that's great, Larry. Well, did you take advantage of it? Or you just sitting there doing your normal job? Just, the stock market's up. So I guess that means everything's good. But you shouldn't even worry about that unless you are in it. And if you are in it to win it for the long term, it has worked in the past. Just because things have worked in the past does not mean that they're going to work in the future. Just ask Japan. They are still waiting for the 80s to happen again. Well, that's a pretty large economy, guys. Number 3, still waiting. You know what? At some point, and I say no, you got to get in. You get out, you trade it, you move it into cash, you wait for your next entry. Or you could just buy and hodl. But the stock market bubble has burst. Just no one's seen it. Well, you have. But we went down, we came up. Here, I'll show you something. But really quick, because I know you're like, I've seen this before. Yep. Oh, the market goes down. Everyone's like, Johnny Bravo, you're right. Oh, Johnny Bravo, you're wrong. Oh, hey, look, Johnny Bravo was right again. But it's okay, because you get to make money going down. You get to make money going up. Oh, and you even get to make a whole lot more money going down. In the anxiety, in the denial, in the panic, in the anger, the depression. This is the hard time, and it's down here. You're just like, what are we doing? If it runs flat, well, then I have some options plays for you, but we are not there yet. Stock market bubble has burst, and investors, if that's what you are. I'm an investor. I just invest. That's all I do. Betting on a rally are in denial, investment manager says. I mean, unless you guys think that our economy is gonna be booming, everything is great, keep it up. I think we're in that, is it the denial, the hope, let's go back to normal, right? That's where we're in. Everything's normal again. Yeah? No? The speculative era of stocks is over. The investors are in denial over the burst. Yeah, because so Janet, stop heading over to Ukraine, okay? And make more of those bonds and then send it to America. Don't send it over. Yes, if you want to see a boom, we'll give it to the people. They'll spend it like that fast. Yep. The only problem is you have to pay it back with interest. Oh, dang it. And now they're doing it, spinning it and sending it overseas, which you have to pay it back with interest in your taxes. That's great, which at the end, I'll show you how bad it is. The investment firm says liquidity in the market was shrinking faster than in 2000 and in 2008. Liquidity. Same thing in the crypto market. You guys are running out, which also means look for some volatility in the Bitcoin. Investors buying into the current rally are ignoring changing market conditions. The firm is warning you, and you have what's called recency bias, and everything's going to be okay. I say if you learn what to do, you will always be okay. You just have to be just a little bit, one brain cell smarter than the other guy, and you got this. Like that Tesla trade. Now, it's different. Okay, it's different this time. This is where I shorted it, 253. I did it live on the channel. I put it in the course. If you want 60% off, link in the description. This was my bear market course when I clearly saw this is it. We're going down. Time to launch. Boom, exited 50%, and then the rest of it. But hey, now you got a swing trade. That is actually one of the sickest swing trades because what goes down must come up. What goes up must come down. It's just pretty much logical. Here, you enter right there. Now you're below the 200, so you gotta have the guts for this one, just in case you wanted to try to swing trade it. But on Tesla, woo! Do you exit on the next day? Nope. Earnings, you'd get caught on that. You'd have to wait and then jump back in. Sorry. Boom, all the way. Oh, are you below the Bravo 9? No, you're not. You're actually holding on to it. You're holding on to it. You're out. There you go. That's clear. You take at least half of your profit in the Lux Algo zone. If you're not doing that, you're just waiting for it to go the other way and like, dang it, I wish I would have sold. But on this one, to the top you're up 81%. What goes up must come down. Also, believe it or not, you would still be in this trade. This is crazy. Look at this. It was on the line. Still, it's under the line, but it's a green day. You're like, okay, I'll wait till tomorrow. Back on the line. Another day, it's down, but it's a green day. Oh, wait one more day. We're back up. We're above the line. You just have two really big things against you. If you're hodling Tesla right now, this is the MACD. You see that line right there, those two of them? Yep. Do you see they cross? This is where I would completely exit my position. Now you have a negative divergence. It's fighting its way to the downside. It wants to sell off. The money movement is down. Smart money, get out. We already got out. 1 zone, 2 zone, 3 zone. Investors, just hold it. There's the 200-day moving average. You think you're just going to run up and clear it? I highly doubt it, but I could be wrong. Now, do I think Tesla is going to crash? I don't think it's going to crash. It's just going to go down. And then you make money. This is all paper traded on this channel, not financial advice on this channel, all the way down. You just follow the simple rules, and most of the time, you'll do okay. It's not always a win-win, but neither is life. And Morgan Stanley coming in from a little warning shots fired over the bow. Top stock strategist. That's a lot of S's. No, it's not. Sorry. Mike Wilson says the bear market could resume in March. Well, that's tomorrow. So there we go. Our bear market. How was January and February? Great. Now March, April, May go away. And the tailwinds and the headwinds in this market, but again, it just depends if you're in and out. But if you're just hodling, whatever, I don't know. Good luck. Oh, and just in case you wanted to see when I was talking about Japan, the Nikkei, look at that. See this top? Way up there. Where are you at? Not even close. Still holding since Duran, which I know they're back, but they look a hell of a lot older. Actually, my wife booked concert tickets. I'm like, I'll go. Now you guys are like, wait, okay, AC/DC? Same thing, right? They're still holding since AC/DC was cool. It's still cool. All right, don't click the like button. U.S. stocks are in danger. They're in danger, and they're in the death zone. Why? 26%. Okay, great. Within months. Well, that's, I guess, starting in March. But I say, why not take profit, right? You go to the top. You say, yay, I did it. And then you could have fun on the way down. To me, it's like a cool video game. You're like, really? Millions of dollars going back and forth. That's a video game. Yeah, sure. That was one of the things that pulled me away from my video game addictions. Ever since I was a kid, I've just been into it. But it's like, oh, I can actually, those digits are real? Fight harder. But I guess right now we are just in this waiting game of like, okay, March or whatever. Just depends on the stock you trade. Is it Tesla? Okay. Is it S&P 500? Is it Bitcoin? All of them trade differently. All it takes for you is turn on a few indicators and then you'll go, oh, okay, I get it. And now you understand why these guys or me or other people, I mean, if they understand charts, charts predict the news. So we may be a few days off, but I'll tell you next week why the 2023 stock market rally may be over right now. But the market went, okay, sorry, the Dow's down right now, but whatever. But the Dow went up about 1/4 of a 1/5 point. And the economy is booming. Oh, right. Next story. Household debt hit record 17 trillion. Inflation was still, now this is your frightening story. It just came across my feed and I was like, it's this one here. Not How to Lift or Warren Buffett. Critical warning. It's global depression by 2025 caused by double-digit inflation. And I'm like, oh, well, inflation? No. Well, the Fed has control. And then I started thinking, wait, double-digit inflation, interest rates, Fed's in control, the Fed's not in control. Oh my gosh. And I was thinking, what if, because the Fed's not in charge, they just follow the 2-year yield. What if the 2-year yield keeps going up? Oh no, I don't even want to think about it. Then I have to think about it because I thought it wasn't going to get any higher than that peak. We're on to the next peak, okay? And we're going even higher than I thought it would go. And if for some reason you guys, because the Fed chases the 2-year yield, it makes them look like they're in control with their federal funds rate. Where's my, there it is. There's Jerome. I said, once this orange line passes that blue line, that means he can chill and stop saying, nope, keep going. Guys, I'm telling you, you can't say we're done until that blue line, which is the bond market, chills. And I see no chill, nothing. So yes, if the bond market, if the debt worldwide, what everything comes from, debt-based system keeps moving in this direction, you could see a Great Depression. And are we done yet? That would be the MACD. If you want to see money flow, okay, this is where you enter. Okay, that's where you exit. When they diverge, converge, diverge, that means, okay, the Fed's done. Guys, it's again, no chill zone. That thing is still, you guys can see what I see. Being a trader, this is just, if you're new to this, the blue line and the orange line, they need to converge and then diverge, heading lower. That's not happening. I mean, yes, we're starting to calm down a little bit, but oh no. And just to give you a length of time from here to maybe there, that could be what? 2 years. That's why I come on this channel and I say, let's be risk adverse here right now and let me help you. Let's protect wealth. You learn it. That's why I have all of the courses that I have so you can learn it, whether it's crypto or stocks, bonds, crypto, starting businesses. This is what I've done my whole life. But that doesn't mean you start a business and you just walk away from it. Hey, look, buy and hodl. I did it. So please be careful. Buying stocks is just not worth the risk today. That's for investors. Well, as you're a trader, and then it's worth it. These analysts say they have a better way for you to get returns as high as 5%. Well, you come on this channel, so you probably already know. Isn't this nice now that you've subscribed? You're like, well, where are you going to get 5%? You know, we were just on it, so I'll go back to it. 1 year. You call your bank. If it's Chase, I don't know what bank you have. You say, hey, I want a 1-year treasury. They say, okay. It's paying you tell them it's paying 5.015 today. That's 5%. I will take one of those. Or if they're like, well, we don't have that, but we have a CD, a 1-year CD at 5%. Okay. See, banks just like to arbitrage the difference. The best rate you're going to get right now is on a 1 year. You can do a 6 month. I'm looking at 6 months, 4.9. I mean, it's just a shade below. If you're like, I don't want to risk my money for too long, right above my head, see it says last 4.74. Okay. But the thing is, your money always has to be moving. You cannot just let it sit, which if you ask my wife, she's really good at money and spending it. Hey, despite high inflation, Americans are spending like crazy. It's kind of puzzling. No, it's not. Look at their credit card debt. It's through the roof. It's never been higher. Look at American savings. It's gone. And unless all of these kids right here, some moms, kids, with all their Nikes, their cool kicks, fire, right? Oh, little Balenciaga back there. Cool watches. I mean, unless they're using the money that they make from trading, like, okay, so I've made $1,200 this month from my work. I'm going to use that $1,200 to buy stuff. All right. I just don't think that's happening. And I can guarantee you, if I go back, something's expected going on in the U.S. economy. Inflation remains high. Americans went on a spending spree last month, eating out at restaurants, shopping for cars, blah, blah, blah. I can go back to 2008, probably find the exact same stories. Actually, because I love you and I do the due diligence just for you and I, 2007, most Americans, are moderately upbeat. This is 07, about family finances in 2007. Most Americans are moderately upbeat. That's great. Everything's great. Their family, coming year, 57% expecting improvements in their financial situation. It's the same song. It's the same dance. I mean, even look at their charts. In 07, would you describe your current financial situation? Living comfortably, almost 40%. Living comfortably. Somewhere between meet with, you have extra. So 40, 50, 60, 70%. Everything's great. 32, just enough. Okay? You want to know what it is right now? Over half of Americans are like, I can't make my next payment. I mean, I even showed you, I think it was yesterday, people making over $100,000 a year are like, yeah, just paycheck to paycheck. So can you just imagine for a moment, right? We are worse off than we were in 07, 08. And here we go. The consumer is not strong. Just let's fast forward. And I always say this, 99, I'm like, wait till 2000. We hit 2000, you're like, oh my gosh. Can we go back to 99? I'm like, wait till 2001, 2002, 2003, 2004. It's a debt-based system. Okay? And if you don't understand it, you're going to lose all of it. It's just how the system is set up. So please, if you could, get off of your butt if you're currently sitting, or stay sitting and figure this out, because you have a family that you need to take care of. You need to learn this stuff. You need to start moving stuff. I love you. I'm just saying this because I want you to be okay. But whatever. The stock market went up today. I'll see you tomorrow.